Hello and welcome to the new DecisionPoint trading room. My name's Erin Swenlin and I am here with my father, Carl Swenlin. And we are ready to show you the charts we think that are important going into this week, as well as take your questions and symbol requests. If you'd like to join us live for this at noon Eastern, just go to our website, decisionpoint.com, and you'll see a banner there that you can use to sign up to enjoy this trading room live if you are watching this recording on StockCharts TV and YouTube. All right, Q&A box for your questions and symbol requests. Chat room is for you. Go ahead and just use that drop down to send it to everyone. Welcome you to go into the chat room and say hello to everyone. All right, let's get started without any further ado. Before I do, though, we are not registered investment advisors. All trading decisions are your own. Anything you hear in this trading room, I often talk about buy points and sell points. None of those are to be considered calls to action. And I think we're there. Go ahead and share your screen, Dad, and let's get this started.
Okay. Let's start out with the weekly chart of the SPY. This, we had some good news on this chart if you're a bull or a hopeful bull. On Friday, the weekly PMO turned up. That's a very good sign. And we also had a breakout from this falling wedge formation, which is to be expected when you see this. It doesn't mean it's going to go the distance. It just means that prices are getting so squeezed that we need to, let me get my arrow built up here. Yeah, that it's gonna break out through the steepest line. And after that's done, then you hope that it's going to continue in that direction. We don't know at this point. Let's go to the short-term indicators. Swenlin trading oscillator for breadth and volume, and they both topped on Friday. These are an end-of-day indicator, so they're not going to be updating right now. So
yes, but our DP Alert subscribers will see those updated indicators at the end of the day with our commentary.
Right, indeed. And with today being sort of iffy in terms of price movement, we're probably going to see these continue to fall. They are good short-term top pickers, and every once in a while, like here, we got a top that didn't really roll over to here, but the STO was topping several days ahead of this price top. So it's a good indicator. Intermediate term indicators, the ITBM and ITVM for breadth and volume.
Yeah, finally getting positive there.
Right, it got positive on Friday. Again, this is an end of day indicator. But you know, we've got this top, then a lower top, and this is possibly where it's going to top, and that may we might be headed lower with percent of PMO buy signals, PMO crossover buy signals. That's topped out, or that hit an overbought level on Friday, and so it's due to roll over. So intermediate term looking iffy, and I didn't do the climax assessment. On Friday, we did get a downside initiation climax, and they weren't really robust climax readings, but they were there. Were not backed up with volume. S&P total volume was short of the 1 year daily average. Let's go for gold. It's still churning around here, we hope that this is about as low as it's going to get, but it still hasn't picked up any enthusiasm. One of the problems is the dollar index, which has been rallying, but it's pulled back, this is the area that's helped the gold to level off at least. Crude oil had the falling wedge breakout, and now it's churning around there. It doesn't, when you get this breakout, that fulfills what the wedge is calling for. So it could either head higher or just sideways, or just start heading down again. Obviously, there's not a lot of enthusiasm in oil there.
I do have to say, though, and I'd love your opinion on it, is a reverse head and shoulders possibly setting up in the short term.
You're looking at head,
Yep.
Shoulder, okay.
Yep. Maybe,
Possibly.
maybe not.
Yeah, possibly. There's enough here for a shoulder, and yeah, if it goes up here, I'm not a great lover of the whole head and shoulders or reverse head and shoulders, but yeah, I see that. Okay, and Treasury bonds, this is the 20-year. It has bottomed and is struggling higher, not with a lot of enthusiasm. And have I forgotten anything?
Bitcoin.
Of course. Bitcoin struggling to get higher. Let's look at the long-term chart. Longer term, let's say, this shows you where most of these support and resistance levels are coming from, is over here. This is a strong one, this level right here. And maybe we're going to get back and test that. I don't know, but I think that we're just watching one of the spasms as it heads lower. And
let's see, gold miners. What are your thoughts on gold miners? Because I know with gold, it's sort of bottomed out. I know a lot of people are looking to that area as, place to bottom pick. I don't know about you, but I think it's still a little early. Certainly with this breakdown today, I hadn't even seen that.
Yeah, it's gold miners, unless we get some enthusiasm going with gold itself, I don't think we're going to see anything going on with the miners. And as you say, this is a new breakdown. And look at the Silver Cross, where it's 0 on the Silver Cross index and close to 0 on the Golden Cross index. So now,
yeah, 0 participation. I know I haven't been a fan either. So
stocks above the 20, 50, and 200 are all at 0.
No pulse.
No pulse. Yes.
All right. I'll let you kind of look through the questions, but right off the bat. So Roger asks, he says, Elliott Wave sees strength in August. I'll tell you right now, neither of us follow Elliott Wave, but seasonality, which I know you do follow, says otherwise. What are your thoughts?
Oh, okay. Yeah, don't know, Elliott. Seasonality. I'm drawing a blank.
I know I have to look at our list. I mean, it's at this point, it hasn't been, that helpful, to be honest. I know that go away in May. Now everybody, we're getting close to that September, October period, which generally isn't that great for the market. If Elliott Wave sees strength, I think that's great, but I'm not going to say that, since I don't follow it, I can't really put a lot of stock in it, if you will. But seasonality, it's kind of interesting. Usually I like to kind of know what's going on. Unfortunately, I don't know right now. I should. But Seasonality is sort of that backdrop, but really what's most important is what we're seeing right in front of our faces with those indicators and, what we're getting with all of that more so than, seasonality. I think it's a nice backdrop, but generally we don't trade off of that. That's for sure.
Right. Right now we're in a negative seasonality period, which will last until November 1st. And the worst month is usually September, if I recall, for that 6-month period seasonality, but can be anywhere. And right now, yeah, we've got the Fed raising interest rates this week. We're pretty sure it's going to be 0.75 of a point. And if they change that one way or the other, it's going to panic people, I think. So that's that.
So what is another question, Carl? Is there a specific indicator you use to distinguish between a bear market short-term rally that lasts 2 to 3 weeks versus a longer-term upturn? So short-term bear market, short-term rally. I mean, I know really when we've been looking at the DP alert, it seems to me that the STOs combined with our intermediate term indicators have been really good about calling tops for certain.
Right. I don't know how to distinguish whether a rally is going to be longer term or short term. The only thing I could say is I'll have a sense of it being, for example, this rally certainly got a lot of people excited, but I never felt that it was going to go anywhere. It was just enough of a breakout from this declining tops to get everybody excited, but it failed eventually.
Yeah, and one of the things we are finding too is that those bearish signals are more apt to resolve to the downside as usual, but they're more, we've been getting those following through far more than our bullish signals have been following through, which is certainly, I think, another characteristic of the bear market we're in. All righty, so that is the questions I have so far. Somebody asked about TLT long, what our thoughts are on that. It looks pretty good right now, but with the Fed raising rates, it seems kind of counterintuitive to think that we're going to have bonds really rally in the long term here.
Right.
Okay, good. I love it. He just agrees with me. That's awesome. Okay, let's see. The rest look like mostly symbol requests. So I'm going to move on to our sector review. And I'm going to start off with the candle glance of all of the sectors. This is my own candle glance setup with the PMO on the bottom. It's about I think 6-month chart. And we have the 20, 50, and 200-day EMAs, pretty much those really solid, basic indicators that I definitely want to see. But then we have our charts that go under the surface, and we'll concentrate on those in just a moment. So first of all, just looking at overall what we're seeing here, we do have a couple of breakouts going on. We've got a breakout happening here in financials, certainly in real estate. I know that when I was looking at the participation on real estate, it was starting to improve. I really liked XLI on Friday. It's still holding above the 50-day EMA. And, when we look over here, I think, this looks really promising here as a bottoming formation in energy. We had a really large correction, and this is looking very interesting, I will say. We used to say that on our Market Watchers Live, it looks interesting. We wouldn't step out on that ledge a lot of times, but staples too, you can see a nice little breakout here and the PMO getting into positive territory. XLY, which has been really showing the leadership as of late, does look like it might be starting to pull back just a little bit. And of course, technology, which everybody is always interested in knowing about. PMO just now reaching positive territory. Again, had a nice move to the upside, like discretionary, but now we're seeing a bit of a pullback today, but support is still certainly being held here in the short term on all of these. So not a bad look. Comm services is starting to look soft again as it peaked just above that 50-day EMA. I really liked industrials going into this week, like I said, and we are seeing price sit above that EMA and this support level. So let's go and we're going to look under the hood on some of these charts, and then we'll get into your symbol requests. All right, so first off, I want to look at staples, and that's because we do have that new little tiny breakout out there to see what's going on. So these are our sector charts that include our silver cross and our golden cross, and then our participation as well, marked by the stocks above their 20, their 50, and their 200. I, of course, love stochastics and relative strength, so we've added those as well onto these charts. All of these charts as is are available to our subscribers from our blogs and links page. You'll find it in the upper left-hand corner in bold. There are 3 chart lists. Golden and Silver Cross is one of them, and a sector chart list is one of them. And so you will find all of these charts on our website there. So it's important, though, to know what's going on under the surface. We looked at gold miners and really no heartbeat. So what's going on with staples? Are we seeing a little bit of improvement? Now, I will say all of these participation indicators, including on-balance volume, will not update until the end of the day. So we will have the fresh numbers when we get the close. But as of Friday, we were starting to see a little bit of information here that staples might have a good week. We have stochastics turning up in positive territory. I'm just not really thrilled with the declining trend here in the participation on consumer staples. Now that could change this week, but really when I looked at this one on Friday, I wasn't thoroughly impressed. I like this tiny breakout today, but ultimately the real overhead resistance still is up here at about 74.25. Energy, this is the one everybody's very interested in as well. So we can look at that one under the surface. But I like that. I really do like the way this is showing up as a kind of a bottoming pattern. There's your reverse left shoulder head, right shoulder building. And then you can see our RSI just hit positive territory. The PMO just gave us a crossover buy signal on XLE. And you can see Silver Cross is still pretty much in the basement. But overall, the foundation in the longer term has been pretty good because we do have 95% with golden crosses, 50-day EMAs above their 200. We did see a real knock on participation, though, last week. And, you know, that was during this little churn period. So not looking that great, but I have to say, I'm liking the way the price action is starting to gel a little bit here. We're going to really want to watch and see if these participation numbers start to improve because they're still a little bit on the soft side, I would say. All right, XLK, and then I'm going to look at XLRE. So with XLK, you can see that we do have RSI positive, and we have the PMO just getting positive as well on XLK. Problem I have with XLK, here's where we did get that really big push in participation, which really helped fuel this rally to the upside. I don't like that it's tipping over. I don't like that we're seeing stochastics tipping over, but the picture is still not really that bearish for me to get that bearish on technology. But I will be very curious to see what these participation numbers look like at the end of the day. This pullback, at least we're holding above short-term support as well as the 50-day EMA. But I would say we really want to see technology make the turn here pretty quick. And that will, of course, continue to fuel the market. And that would be a good thing to get everybody on board. But technology is usually where we look to see that strength. XLRE is a defensive sector. And as we noted, we were starting to get a little breakout again, just like on consumer staples, the PMO rising nicely. The participation under the surface has been really, really nice as it starts to improve. We have 93, 94% with price above their 20, which makes sense when you look up here because most of those XLRE stocks must be getting above their 20, just like the sector itself. So we're seeing a lot of nice improvement under the surface for real estate, but I think the long-term outlook is still quite suspect on XLRE. Talking about materials, and then we can move on to some of those symbol requests and questions. As you can see with materials, of course, gold being a big portion of the materials sector. And we can see again, it's been on a really nice rising trend, clearly not fueled by gold, because we looked at that gold chart and it's been just sort of, churning around along support. But the material sector itself is starting to really heat up here a little bit. And, I like the participation that's starting to improve underneath the surface here. But there's still some work to do. We'll have to look at some of those materials charts if we do have some of those in here on our symbol requests, because I do think this area is starting to look really interesting as well. And
Erin, on these charts, the one thing that I've been noticing though is stocks above their 200 has really been low on all of them. And, you're not going anywhere until you get the prices above those.
absolutely. Yeah. And that's, something to keep an eye on. I mean, we are getting these, as we were just talking about, bear market rallies. And in the case here of XLB, you can see that the sector itself has gotten above the 20. So we would expect to see a lot of these stocks getting above the 20. But there is some distance here between price and the 50, and certainly with the 200. So I imagine it's going to take some time before we start seeing this number improve. So got a lot of work to do in most of these sectors. And, we did look at the S&P. Currently, it's looking, let's see, we'll do a quick peek here. Now we are seeing prices down a little bit, well, mostly unchanged, let's face it, but support holding still. But, these pullbacks, you can see this little pullback, and we looked at discretionary and we looked at XLK. And again, big drivers of the market, both of those sectors starting to pull back. And that's kind of what we're seeing here in the market overall for the sectors. All right. I think we covered most of the sector and the market in general. So let's go ahead. And I think we can move on to some of these symbol requests. I think before I start it, I did notice you have Apple up on your computer screen when you were going through everything. Did you want to pull up the Apple chart to start us off?
Sure.
And then David did ask a good question. We'll have to go through real quick after this.
Okay. Yeah, I have my FANG Plus list, and Apple has been doing very well since the June low. Let's see, how many percentage points has it been up?
Wow.
21%. So it's theoretically back in a bull market itself. And it's really an amazing stock, but it's still, I think, got much further down to go before the bear market is over. I don't know if I want to go through all of these, but Amazon is another that's been down almost 47%. And here's the 20-for-1 split.
Yeah, it's interesting. After stock split, they tend to do poorly for a little while, I've noticed.
Yes.
All right. Question for you. What triggers the red and green arrows on your S&P chart that he had just seen, which was at 9:18, which was about 7 minutes ago? So I'm guessing it was your climax chart with all the arrows on it.
Yes. Let me get that. There's
And then,
1 year
yeah,
down. Here's some. Okay, here what we notice when the VIX hits the lower band or the upper band, we mark that with a red arrow as because then it becomes bearish. It's overbought and it's oversold at the green arrow. So that's what those are about. If we look at the climax assessment chart, same thing. That's what we're pointing out the, let me get rid of that.
those punctures.
Pointing out when the VIX hits the upper or lower bands.
And you can look at that chart and just see that typically when those happen, you do get the upside reversals on the punctures of that lower band on our inverted scale. Although bear market, right? You can see that those ones earlier in the year at the end of April and May didn't really resolve with much in the way of upside. Another sign that the bear market is in force.
Indeed.
All right, let's see here. Okay, the rest look like symbols. Nope. Do you have details on how the indicators on the chart work and what they mean? For example, the golden cross and on consumer discretionary, et cetera. You will find on StockCharts, we do have articles that are up there on most of our indicators. I will admit to falling down on the job, and there is nothing in there about the silver and golden cross right now in chart school, but pretty much everything else, the PMO, the ITBM, participation, those types of things are going to be in chart school on StockCharts. So you can go there, and chart school is free. So you can just hop in there and look up some of these indicators. But I will admit silver and golden cross aren't in there, but I see my dad's getting ready to explain it. So I'm going to let him do that.
Right. The golden cross has been known for as long as I've been alive, probably. That's when the 50 EMA crosses the 200 EMA. I should say moving average, whatever. Mm-hmm. And it's called, when it crosses up through the 200, it's called a golden cross. And when it crosses down through the 200, it's a death cross. Very dramatic.
Right.
So I decided a few years ago to set up an index that tracks the percentage of golden crosses in any given index. We track 21 sector and market indexes with this. So it's a tremendous indicator, I think. The silver cross is something as we've been using the 20 and 50 crossovers for a long time as well, just for DecisionPoint. And I decided, well, that's a silver cross, because it's less valuable, less long-term than the golden cross. So they're pretty good, a pair of indicators. As you can see in the consumer staples, we get a rising trend on the silver crosses in the index. That's up to about over 50%.
All right, another question. How different is your PMO from the PPO? What is the correlation ratio between them? Like I say, we haven't calculated a correlation ratio. The PPO being the percent change for the MACD. They do travel very similarly. If you put them both on a chart, you're going to see them travel very similarly. We do a little bit of a different time frame, if you will, for the PMO. We use the 35-20-10 setup, whereas you'll usually see with the MACD PPO, it's a 26-12-10, I think. So that would be a different setup. So you're going to get different readings just off the bat because of that. But we find that the PMO, I mean, the calculation is very different from the MACD, but they do travel very similarly. You could put a correlation on a chart with stock charts, and then you can see it for yourself. But typically, they're going to travel similarly, but we do find that the PMO will bottom at different times, and you'll end up with some of these divergences more often on the PMO than you do on that PPO for whatever reason. So we do tend to use that PMO instead. All right.
Yes, it's been a while since I've looked at it, but I found that the PMO tends to be a little smoother. That's it. But that's where.
Okay. What indicators allow you to say that Apple has much more downside before the bear market is over? What will tell you when the bear market is over? Are you fully invested today? When will you get fully invested? Okay, that's a bunch of loaded questions, Roger. So right. I'll let you do the first part, and I will do the second part about being invested.
Well, Apple, I don't have a good reason other than I believe the bear market's not over and that all stocks are going to suffer before it is. I mean, I'm expecting before this bear market ends that there will be a correction from the all-time highs of 60 to 70%. So that's why I say that while Apple is in a rally now, I don't think that's going to last. But that's just my opinion. It's not a prediction. It's my opinion, and that's what I'm expecting.
There you go. And what would tell you that the bear market is over? Well, I have to say, at least for me, I would want to see that declining trend, that longer term declining trend, broken, which we really haven't seen. I think it's on a 1-year chart. And as far as being invested, I do tell everybody in the DP Alert and in DP Diamonds what my exposure level is. So you'll be able to see how I fluctuate between, being fully invested versus not being invested at all. Currently, I'm at a 40% investment setup exposure to the market, which I'm still kind of uncomfortable with, but given that recent rally, I felt confident enough to at least increase to that 40% level. I know that when the bear market started and we made our way down, that I moved to pretty much 0% to 10%. My subscribers will tell you, I can't remember myself. And I will get fully invested. Well, certainly when we're out of this bear market, that would be a very good indicator for me. And, unfortunately, when are we out of this bear market? What indicators? We've been looking for positive divergences on new highs, new lows, on a lot of our other indicators. We've seen some of those things happen, but they have not resolved with serious intermediate term upside. I mean, obviously you can look at the chart and you have to be very nimble with your trading right now. So when the bear market's over, well, certainly you do have the monthly chart up there, Dad. So I'm going to let you talk to it.
Right. When the monthly PMO gets back above the signal line would be a very good indication. Right now, we're the opposite of that, overbought and heading lower. So, but of course, a monthly chart is a very long time to wait. So let's just look at the weekly chart. Mm-hmm. Still a long time, but all right, it's turned up. But again, we want to see that the weekly PMO cross up through the signal line, and we've got a good start on that, but don't think it's going to work out ultimately. And then let's go to the 1-year daily chart. I can't say, I can't say on a long-term basis what's going to tell me that the bear market's over, because this is not long-term enough. But these short-term rallies, breakouts can be a signal. That's you start working on it in the shorter term and then hope it extends into the longer term. But right now, yeah, we've got a nice little start, but I don't think this is it. I don't think this is it. Simply look at the background. We're working with the raising of interest rates. And as I keep saying, it's a myriad of things that are going wrong right now. Just everything is going wrong. And I just don't see the market recovering in that environment.
It's got it has a lot of gravity to overcome right now when you look at what's going on globally. I did notice we have some commodity requests in there, so I will look at a few of those. We have to, unfortunately, that's why you all are in here. We have to be nimble. We have to find those pockets of strength. And as we go through some of these symbol requests, I can help you out there. I do a trading room on Friday for my DecisionPoint Diamond subscriber. It's an hour and a half. And not only do I do that sector review, I look for the industry groups that are starting to show strength. And then we look at some symbols that might look interesting going into the week on Monday. So if you're a trading room fanatic, DP Diamonds are definitely for you. All right, I'm going to grab that screen and we're going to start with corn. I think we'll look at corn and wheat to begin with. And I'll explain my chart really quickly before we move forward. So what I'm going to do is I'm going to have a daily chart here on the left. It includes pretty much those indicators we were looking at before. This doesn't have much to do with what's going on in corn, but what I like to do is compare the industry group itself against the SPY, the symbol against the SPY as far as relative strength, and then the symbol against the industry group. And that tells you whether you have a stock that's really showing leadership within a group. So we want to find those strong groups, and then we want to go down here and find those relative strength winners against the actual group. On the right, I have my 5-minute candlestick chart. This is where we time our entries and exits. I don't use this to decide if I want something or want to get rid of something. I come to this chart already knowing what I want to do. And I use my indicators to give me a sense of when is a good entry. A conservative or mechanical entry on a 5-minute is a PMO crossover alongside a positive RSI. So that's your mechanical conservative entry on these 5-minute charts. Of course, there is gray area in there. And so I also will look at chart patterns. I'm going to look at, the volume. Sometimes I'll be paying attention to that. But overall, I'm looking for those PMO crossovers with a positive RSI. As far as sell points are easy. If I want to get out of a stock, I just need any excuse. And so I come to my 5-minute chart and I just look for a PMO that's turning over. And typically that's going to get you out. You may, in this case, it was a very quick decline, but it would still have gotten you out before we ended up hitting the lows here. So that's the basics. Now let's get back to the actual analysis. So corn had broken this area of support. Let me add my inspect tool so we can see it a little bit better. So short-term support broken, but you can see that, longer term, this was a pretty strong area with these lows and these tops. So seeing the move out of these lows, out of this support, I think is constructive, but really the rest of the chart is just not shouting to me that we're going to get a nice rally out of this. Certainly after this big correction, we would expect to see that, but clearly futures are not pointing to the direction that we would expect. So PMO is flat, not helping us. Stochastic's negative and falling. I just don't see it for corn. I don't think that we're ready to move forward with corn. And wheat would be another one. So we'll look at that. Similar situation. In this case, you really have that strong support level. It's very clear what it is. We're currently getting a bounce off of it. But again, these indicators are just not firming up enough for me to want to jump in here to take advantage of a possible rally. Certainly, this is a really encouraging move here with that move, but now we're seeing a filled black candlestick. Those are bearish formations. Candlesticks, by the way, are 1-day indicators. You get the candlestick and it'll tell you what to expect the next day, and that's it. So just so you know that. But a filled black candlestick is very negative because it tells you that even though price is up, it's below the open. So the bears are starting to win the battle there. So filled black candlesticks, you don't really want to see. Typically, they're going to be at the tops of your moves. So not always, but often. So wheat, it's similar to corn. I don't see this as a great entry just yet. We just don't have enough momentum showing. It's flat. So that's where I would go with wheat and corn. All right, Dad, is there a symbol in here that looks particularly interesting to you?
LPG.
All right. Yes, LPG was kind of the darling last week when we looked at it, mainly because it has such a high yield. And you have to be careful when you see these high yields, because a lot of times your PE and earnings per share will be very negative in the case. So you have to be careful. But in this case, we do see positive PE and earnings per share alongside this very high yield stock. Having a good day. We talked about it. Let's see. So this is Friday, Thursday, Wednesday. So we talked about it on this big jump and that candlestick, that filled black candlestick. And we got a little bit of move to the upside, but at this point, we're just kind of churning around. And, you look at the XLE and it looks very similar. I think that with this double bottom, it looks
Let me comment here on that the yield is certainly amazing, but I looked into it a little more deeply, and this is not based on a steady quarterly dividend. If there was another one before that, another quarterly before the $1. There's $2, then the $2.50 in May. That's it. That's all there is in terms of history on the yield. So I don't know what's going on with that in that regard. LPG, that's liquefied natural gas, I think.
Yeah, I think it is.
Yeah. And this is a company that ships a lot of it. But as far as, lovely dividend yield, but it's not steady. It's not something that will continue necessarily.
Right. You can't count on it, basically. The indicators are looking pretty good. If you were going to be in oil equipment services, certainly this is the stock you'd want to be in, simply because it's outperforming its group by so much. Stochastics are positive. I think this one looks good. Full disclosure, I do own it. I'm going to be waiting to see if we're going to get that move off of this support level, because this double bottom still, I would say, is I'd still say it's there, mainly because we haven't seen the breakdown below that confirmation line. So if we do get that break below the confirmation line, it's going to be out on the pavement as far as my portfolio goes. But I'm certainly happy with what's happening today. And as far as LPG on a 5-minute chart, if you are interested in it, you can see that the buy point unfortunately came in on Friday. We did get that positive crossover, but it really didn't become a conservative or mechanical buy until that RSI went positive, which happened pretty much on the gap up today at the beginning of the day. So looking pretty good. PMO did top out. This would be your exit point when the PMO tops out. So that would have given you a pretty good exit point. Currently, the PMO is trying to turn up, though. And, I think that's great, but it's really early to talk about it. But we could be seeing a head and shoulders developing here. So that would mean, obviously, we would want to see this top out before it hits the head. If it gets that far to the upside, then that would certainly, the pattern would disintegrate. But it still looks rather toppy. So I'd be very careful about an entry here, but at least we have that positive RSI. And if you wanted an aggressive entry when that PMO turns up, that would be a more aggressive entry. Certainly you could aggressively enter now with that RSI moving positive.
How about PayPal?
Yes, let's look at
that's PAPL, I think.
Yep.
PYPL. Okay.
I'm getting pretty good at these symbols now. I didn't used to know them. Started doing DP diamonds. I do 10 stock picks per week. And I'll tell you what, I've gotten to know a lot of these symbols. All right, PayPal. So we do have the breakout here. This does look kind of triple bottom-ish here. Let's see, support holding pretty much right at this level. We did see price dip below the 50-day EMA today, but I don't see it falling apart just yet. Really, the big problem on this chart has been relative strength. It's just not been that strong against the S&P. And then you have a...
When I see, a chart that's, I want to see the weekly almost immediately. I want to see,
Yes, I'm always focused very much on the short term, but I do have to say that in DP Diamonds, we do add a weekly chart, and I do talk about it there. Let's see here. Well,
so I'm liking that.
Yeah.
There's definitely some long-term support there.
Yes, and getting that move to the upside, also a weekly PMO buy signal. Let's move back. So the problem I think PayPal has right now is it's stuck in a group that's just not performing very well against the S&P. So consequently, even though it's outperforming its group, it's not doing that well against the S&P. Certainly that breakout above what we now know is here is that support level we know is long-term support now. And we have that short-term breakout going on above this level. I'd like to see it stay above the 50. I think that the chart looks pretty good. I'm not thrilled with the way stochastics have turned down, but honestly, we just want to keep them above 80. As long as stochastics are above 80, you're usually going to see a continuation of whatever rally you're in. So far, so good with that. Just be really careful. I mean, this is in technology, and we are seeing technology pull back just a little bit today. But key is that, to me, is that 50-day EMA, certainly the 20-day EMA. I'd really like to see a bounce come off of that, but your momentum is doing what it needs to, and RSI is positive. If we come to the 5-minute, your buy point came in this morning. Well, not quite until we got that RSI positive. So the buy point came in right in this area, pretty much on Friday's close, looking like it's doing very well. That bottom above the signal line tells me that there is more upside on the day to be had. So I like the look here. Sell point would have been right in here, but at this, I wouldn't be here looking to sell just yet. All right, next up, Spotify is kind of in the same area. So sorry, guys, I'm going to skip that. We did LPG, so I'm going to skip Devon. Ford, that could be an interesting one, and Progressive. So we'll start with Ford, and then we'll do Progressive Insurance. Because I know insurance, about 2 weeks ago, Diamond subscribers, 2.5 weeks ago, we talked about insurance in the Diamonds report. So Ford, though, let's start over here. Cars, autos were starting to look pretty good. Again, this is just a similar look on all of these charts, is it not? We have price holding above that 50-day EMA. Stochastics topped, but they're looking a little bit better now, starting to flatten out. And PMO, I like the way that PMO is looking. The group itself is performing, well, it's a little bit better than the SPY, but certainly seeing Ford above the relative strength moving to the upside. I think that's certainly a positive. All right. And Ford, as far as a buy point, we're there. This is the PMO crossing over, positive RSI, and honestly, it's accompanied here with a short-term breakout. So buy point certainly is in. Just be careful. Declining tops, flat bottom. That is a bearish descending triangle, but I have to say, seeing it break from this declining trend is certainly very encouraging. And I said Progressive next. Keeping an eye on that clock for us. All right, here we go. Really, when I look at this, it's been kind of a, trading range bound stock, and I kind of want to stay away from those. However, we do have a 50-day EMA well above the 200. So we at least know that it's in a bull market configuration, if you will. But this 20, 50-day negative crossover, it's going to lose its silver cross. RSI is negative. PMO hasn't quite turned up, and it has entered negative territory below zero. Stochastic's turning up. Relative strength is still a little bit iffy there, I would say overall. We are at the bottom of this trading range, so I could certainly see a move that would test the top of it, which would be about 7.8%. So I think there is some upside potential still, but I would be very careful when you see those negative crossovers of a 20 and 50-day EMA, generally a warning sign. And as far as the 5-minute, buy point came in right about here at the open on that big gap up. And since then, the RSI has managed to stay positive for most of that time. PMO turned down, though. We're not at a buy point. We really want to see that PMO at least turning up. As long as that RSI stays positive, as it has all day, I could see a more aggressive entry at that point for Progressive. All right. PayPal we looked at. Let's look at LXRX. All right. Well, this happens a lot. The last thing I look at is the 5-minute, and I see a reverse head and shoulders right off the bat. So I like the 5-minute, but let's go look at the daily chart. Daily chart is a little bit suspect here. We do have the positive RSI, but boy, that PMO looks awfully toppy. Looks like it has actually topped out at this point. On balance volume, we're seeing some good movement here on that big move upward. We're back above the 200. I like the look here. Looks like the group, hang on here. It always happens. Most of the people who've been in our trading room for the longest time that I've been doing this always know that every other Monday I end up with the barking. So forgive me. All right. PMO turning over. I'm not really thrilled with what's going on here on the daily chart. If I owned it, I don't see a reason to get rid of it just yet, but I would be very leery because that PMO is trying to turn down.
That PMO is at near 20, which is really, really high. So
yes, especially overbought.
Yeah.
So yeah, I mean, we've got the breakout above the 200, but the chart's starting to look iffy. Like I said, I think I would be willing to hold it. I just noticed here, very low price point. Volume isn't that low. We have an average of over 1 million. But when you have a low price stock like this, I always say that you need to position size appropriately. Really easy to buy a ton of shares, but you don't want to have that kind of exposure. And low price stocks like this can be very, very, very volatile. All right. It's a biotech. Has been doing well with the biotechs. As I said, I really like this reverse head and shoulders I'm seeing on the 5-minute chart. PMO is rising, RSI is positive. I think you could make a case for an entry here, but let me update this. Yeah, we're still, it did hit the support level, ended up with a shooting star candlestick. So we are seeing it pull back just a little. PMO is flattening. So if I were looking at this chart myself, I don't think that I would be going for an entry until I know whether that PMO is going to turn back up and really start to move. Be nice too to see this reverse head and shoulders execute.
Erin?
Yes.
Okay. It seems to me, and I'm not doing this on a like you are, but it seems to me that the 5-minute chart should coincide with something attractive on the daily chart, and it's not.
Mm-hmm.
I don't see how this reverse head and shoulders is coinciding with anything good on the daily chart. It's basically showing us a top over there.
Correct.
So,
well, you can see it right back here coming in. So usually, just so you know, Carl, this is his second time in here. I do go over entries and exits on a 5-minute just for teaching purposes. Not necessarily when I show a buy point on the 5-minute, do I want you to enter the stock?
No, I realize. I just thought it was worth pointing out that,
yes,
that the 5-minute bar should should be assisting with something you're seeing on the daily.
Absolutely. Again, a possible hold here, but I don't know that I would be in it. I would be a buyer just yet here. All right, I'm looking through all of these. UNG, I suppose we did look at LNG. Might as well look at UNG just to get a look on that. We've been very positive on UNG. I think I presented this a week and a half ago for my subscribers. We'd already seen the big move up. Unfortunately, I got sick. My mom was in the hospital. I didn't get to execute my order on UNG. I'm very sad about it, but it still looks like it has legs. We are getting ready to hit some overhead resistance, but I do like the look of this daily chart. And look at the outperformance against the SPY. Not a surprise when you see a rally of this degree. Silver cross just occurred. But, it has been quite the move to the upside, certainly due for a pullback here. And I could see that happening right up in this resistance zone here. So I think there's some more upside to be had. Looks like another 8.5%, 9% possibly, but we have to be careful. That's why I haven't entered. It's kind of run quite a bit. I'm not ready to get in and after losing my opportunities back here. So I would be careful. I'd say definitely a hold. Like I said, I wish I owned it, but certainly something to be concerned about. Just keep that in mind. If you wanted to make that entry, I don't see it today. We've got the PMO turning down below its signal line, even though we do have that positive RSI. On the bright side, we did see that the PMO is starting to pull back a little bit out of overbought territory, and we didn't really see much in the way of price damage. So I still would want that PMO turned up before I would get in, though. And if you were ready to sell, we're kind of at that sell point right here. Prior sell point, we're trading right around there. All right, it looks like we're going to have time for maybe one more. Let's see. XBI, we talked about that. Silver. Yes, let's look at silver. That's a good one. All right. SLV, and then we will close it out. Okay, silver. Well, kind of doing what gold's doing. We've had the big decline on it, kind of churning around here. I don't like this kind of toppy look here on silver recently, but it's holding this level. Let's look at the weekly chart. I think we definitely need to see that. So here was one of the strongest support levels. We've already broken through that. This would be kind of the next support level, I'd say. And we are sitting on that, like gold. But, the weekly chart still looks iffy. We're not seeing the actual bottom here. And I'm not liking the way it's looking here with that sort of toppy look in the very short term after this big gap down. So, things are looking a little bit better on the chart, certainly, but a flat PMO, that doesn't impress me. Stochastics on a rising trend, but negative. RSI is negative.
The 5-minute chart that advanced looks tortured.
Yes.
As we usually talk about gold,
yes,
precious metals,
exactly.
advances.
All right, guys, that's all we have time for. I'm going to close it out and wish all of you good luck and good trading. And again, if you're watching the recording, go to our website and you can sign up to be here live at noon Eastern rather than watch the recording. That's all we've got. Good luck, good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.